You're listening to the Axis Real Estate Podcast, the official podcast of Axis Real Estate, your full-service real estate brokerage in Phoenix, Arizona. Hosted by Jason Sellers and Ted Work. Thanks for joining us at the Axis Real Estate Podcast. I am Ted, and with me, as always, is the excellent Jason Sellers. We also have a guest today, which I will let Jason introduce.
We want to welcome a great friend of ours, somebody that we've known for a while, Zeno Zenarro.
Thank you very much. Thank you.
Great to have you here. We're going to get started with some information about your background, kind of where you came from and how you got into real estate world.
Yeah.
Zeno does mortgages.
Yes.
And remind me the name of your company right now.
So I'm with C2 Financial.
C2.
Yeah, we're a broker and headquarters out of San Diego.
Okay.
Yep.
Are you California, Arizona, all Western states, or kind of where you operate?
Right now, I'm just licensed in California and Arizona.
Okay.
Yeah, that's where most of my business has been over the last 16 years, and that's where I focus on. Yeah.
Yeah. So one of the things we really like to talk about is like how you got interested in real estate or how that kind of evolved. And so let's take it back and just give us a little bit of background on yourself.
Sure.
Where are you from originally?
Yeah. So I was born in Chicago. Hold on to your seat because this gets a little wild. Born in Chicago, moved to California, and then moved from California to Maryland, and then went to school in Vermont. And then after I graduated there, literally picked up my stuff out of Maryland and kept the car running and moving, and came right out to Arizona after that. So I kind of consider myself the formidable years are in Baltimore, a little town called Towson, if you're familiar.
Okay.
And yeah.
And in Vermont, what school was it?
The University of Vermont in Burlington.
And what are they? Are they the
Catamounts?
Catamounts.
Yeah,
right.
You might see them in the NCAA early rounds of the tournament, March Madness, but they don't seem to make it too much further. Yeah, they had a couple great teams back when I was in school there. Actually, 2008, Taylor Coppenrath. I think they beat like Michigan State in the first round. I think maybe Syracuse in the first round.
That would have been big.
Yeah,
and that's right across the border from them.
Oh yeah, it's really close.
Yeah, I mean that's
they're
upstate New York,
practically neighbors. Yeah, exactly.
And what did you study while you were there?
So I originally went in with a kind of biology interest, natural sciences, fisheries, and wildlife,
which is typical for most mortgage people.
Being that your education is completely different from what you actually wind up doing in life. But halfway through, once my advisor told me, what the professional opportunities were doing that degree were very slim, and so I decided, okay, I made a little shift into community development and applied economics. And my concentration was actually community entrepreneurship. So it was actually a really great, well-rounded education that I could apply to my career. But how I got into mortgages was kind of falling backward into it. I graduated in 2008. As many people remember, that was a tough time in the economy.
Sure.
All facets of the economy were kind of collapsing, especially.
So you did not contribute to the collapse?
No. Well, no, I'm going to say no to that.
Okay.
Okay. Yeah, I've always been very ethical, and I actually kind of missed the unethical part where there was a wild, wild west. So I kind of missed that opportunity to have that much fun. But no, I don't think I participated in the decline of the market. But at any rate, so the true story was my dad remarried later in life, and I gained a stepbrother, and he was doing mortgages. And when I met him at the wedding and we kind of hit it off, he's like, why don't you come out to Arizona and try to write some loans? So I said, I have no idea how to spell mortgage, but I will check it out. And so I came out and visited in like 06 or something like that. And he was just doing great, a ton of market activity happening. And it just looked like a great opportunity for me. And Arizona was beautiful, totally different landscape than I was used to ever being a part of. And so it was just really intriguing. And so, fast forward about a year and a half later when I actually graduated, made my way out, by the time I arrived, he'd let me know things have changed.
Things are a little different.
A little bit different. I'm like, what do you mean?
Well, the loan on the $200,000 house is now down to 75.
Exactly. And the bank is no longer funding the mortgages and right. So the collapse was kind of on its way when I first started. I first started with Countrywide, and the first week of training, our regional manager came in on Wednesday and told us, don't worry, we've got more cash deposits than we could ever have. We're so liquid. Don't worry about the stock price. We're never going to get bought out. And then Friday came, and we walked in, they said, "Welcome to Bank of America." So I kind of knew it was going to be, you know, a crazy ride from that point on. But that's how I got into it. I kind of fell backward into it. And what may have been a very tough time to operate as a mortgage lender actually turned out to be an opportunity for me, because I went from being a broke college student to being a broke loan officer. So there wasn't much variation.
Easy transition.
Right. I was used to being broke. And so it made it a little bit easier, still very, 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 very difficult during those times. But
that was those years. That's actually when I changed from doing loans to doing real estate, like the mortgage, the broker side. And I remember talking to a friend of mine who did wholesale. He was my wholesale rep at Aegis. Same thing. Like he walked into the Aegis lobby, and there was actually actual chains around the front door.
Yeah.
So nobody told him or anything. He just showed up to work, and there was chains on the front door.
Yeah, there were a lot of crazy stories like that. I think when we jumped around offices as B of A was shuffling assets and acquiring Countrywide. So at one point in time, there was another mortgage company in our lobby that one day we were in our offices when the feds came in and seized all the property. Any loans that were in process were not going to fund. You know, that was a lot of the horror stories as they were getting to the closing table, and the bank that had underwritten the file to be funded collapsed or was seized or whatever, went under some type of management by the FBI.
So through all that, you must have picked up some pieces. Maybe it was like your memory of how it used to be when you came out to visit that first time, or there must have been something where you're like, you still wanted to stick it out.
Yeah, I think, well, there weren't very many other options at the time, too. It wasn't like you could just
the whole economy
move.
Was kind of like up and going down.
Yeah, restaurants collapsing. Everything was just going under. So, you know, with every tough time, there's always an opportunity, right? When one door closes, another one opens. But I really saw it as a leveling of the playing field. So these people that may have had decades of lending experience were now reduced to the same beginning point as I was.
Sure.
They were used to doing fast and easy loans. That was actually a name of a product with Countrywide, fast and easy, code 401. I'll always remember it. They were giving you a better rate for stating your assets and your income compared to an underwriter reviewing your tax returns and pay stubs. So that whole analysis up front by the loan officer was non-existent. So now you had lenders used to doing stated income loans forced to read tax returns and pay stubs and looking at things up front in order to prevent any problems down the road. So, you know, in that sense, it was an opportunity for me to learn alongside these folks and be in the same, you know, the same category there. And then the other thing, just by happenstance, B of A and Countrywide, them together own 25% of the REO assets, or 25% of all foreclosed homes were owned by B of A, which turned out to be an incredible advantage to us and to me, because we had to pre-qualify all the clients that wanted to buy B of A REOs. They had a policy.
They forced you to do that.
They forced buyers to do it. You know, I think it was unethical. I think looking back, I consider it more so unethical. And at the time, you know, I was just capitalizing on
but that was the bank
opportunity.
Policy.
That was bank policy.
Not to mention, there was probably some other unethical things happening in the background that led to this whole thing anyway.
Yeah.
And not just from like the origination standpoint, but we're talking about from
appraisals
all the way top down and how everything. And if you go watch that movie, what's it called?
The Big Short.
And you learn about like derivatives, and you think about like all the insurance and those things, those products that were developed, those were like played a huge role. Yeah,
cross-collateralization, the financialization of all those products, credit default swaps, incredibly complex. And I mean, I don't know if you do, but I definitely don't even understand it still to today. I mean, they're just mixing things. I mean, but if you want to look at it on a very like micro level, how it all works and plays out, it's way above my pay grade. But I mean, yeah, a lot of that stuff was contributing to it.
So you mentioned it a second ago. So I just want to take a fun moment and talk about the different types of loans. I think you mentioned the state income, state asset, which we call the CISA loan.
Yeah.
And there was the NINA loan.
NINA, yeah. No income, no assets.
No asset. And can you go into a couple other of these acronyms that were trendy or catchy at the time?
Yeah, I think those were the main ones. Ninja, and I don't remember what exactly.
No income, no job. I think I'm pretty sure that's what it was.
Well, maybe, no job verification or something like that. You know, back then, those are the bad ones. And I can't really think of any other ones off the top of my head, unfortunately. But fast and easy, we called it just because that was a program code. it's a fast and easy loan. We don't look at anything. We'll get it done.
Man, what a crazy time.
Yeah, it absolutely was. So that was the beginning. I was able to cut my teeth on a lot of pre-qualifications for folks trying to buy those REOs. And it was a really good introduction to what it's all about. And I was, like I said, reading tax returns, looking at pay stubs, and doing things that now as a loan officer today, you must do. If you do not do that, you are doing a disservice, because you don't know what the underwriter is going to look at and how the loan's actually going to play out without those proper upfront steps.
So maybe for some of the people who are interested in the field and maybe being a loan officer or getting involved in real estate, one of the things we like to talk about is like all the different facets of real estate, like we talk appraisals, mortgages, title. There's all these different things that kind of are involved in the whole umbrella of real estate. What does like your day look like, or what does your week look like? How do you divide up your time, or kind of what activities are you doing now?
Yeah, I mean, it's a contact sport, I always like to call it. So you're just out there shaking hands and meeting people. I mean, primarily my day is lead generation, whether it's making cold calls, whether it's, fortifying my existing relationships with referral partners, joining new networking groups. It's all out there trying to get, what they like to call at bats, just trying to get podcasts. The opportunities. This is my first podcast, and I'm super stoked, because I actually, unfortunately, have been very reluctant to get on camera, to get on a podcast, to do any like social media content. So thank you for this opportunity, sincerely. This is my first try, and excited about it, and looking to grow that aspect of it, because like all markets are changing. Back then it was an REO driven foreclosure short sale market. Now we're in a very, low inventory market. You have to distinguish yourself so much more to get the client to earn the business, both on the mortgage side and the real estate side, even more so today after all the recent changes. So yeah.
Okay, let's do, what about best deal, worst deal? I kind of threw this out at Zeno before to just kind of give you some things to think about or whatever, but I thought it'd be fun to like give people the idea of like what does a good deal look like for you, and kind of like a difficult one. Yeah.
So, I mean, every transaction is different. So many different facets, like you mentioned, just different professions relating to the real estate transaction. There's just so many facets just during or associated with the transaction in general. The easy ones are when everybody is on the same page. And so it's, I think, a lot on the onus of the mortgage lender and the realtors to be very communicative from the start. This is my buyer situation. Once you get the offer, I guess, accept and things like that. Just explaining the timelines and being just very communicative and understanding about how everything is going to happen. I feel like buyers are led down the transaction haphazardly sometimes. They don't understand all the different facets and what all the possibilities.
So like setting the right expectations.
Exactly.
Just like, here's what it's going to take and here's how long it should take.
Right. And if you don't have that upfront communication and everybody's on the same page, if you get to a point where something occurs and you need some resolution to it, you're kind of approaching somebody that you haven't built that rapport with already. If we have something come up on the appraisal or whatever.
So your best deal.
Okay. Let's go back. So let's go back.
Like best deal, maybe most fun deal, or like.
Yeah. Sorry. Yeah. So let me go back to that. Yeah. So like the good deals, I should say. The good deals are when everything goes well. Inspection goes well. Appraisal goes well. Approval goes well. And those are all things that can be taken care of up front. The seller communicating to the buyer what's wrong with the property, if there is anything, the lender communicating to the buyer's agent if there's anything sticky or hairy with the mortgage that's going to be applied for, or the deal that's happening. So the best deals are when everybody's on the same pages and there's no issues whatsoever, clean approvals. And that happens. I mean, I just had a clear to close in 5 days. True story, FHA buyer, clear to close in 5 days.
And what is clear to close? So talk to us about, like, for a second, and I like that you're kind of going to a specific example. So like, I think it's everything going well on the approval and like streamlining and everything is a yes, is like a green light to go. Mm-hmm. And then what does that look like on an actual transaction with like buyer X or whatever.
Sure.
Whatever happened there.
Yeah. So basically, it's all to do with the upfront work. Spoke to the buyer, got all of his information, looked at all of his financial documents, assets, tax returns, pay stubs, things like that. And I am the first eyes looking at the same documents the underwriter is going to look at. So, it starts off with a clean approval, understanding that we have everything in the file all ready to go. All the underwriter has to do is put their check mark, check the box. We've looked at the assets, we've looked at the income, and it all matches up with all the work that the loan officer's already put into the file. So as far as the credit approval for that buyer is concerned, we already know it's going to be a go. So when we send out the disclosures, we send out the LE with the lenders that I work with, I can literally get them to sign the disclosures same day, put it into underwriting, and have a upfront approval within 24 hours. And so what happens when we have an approval? We can give out a closing disclosure. The closing disclosure is the document that starts the 3-day waiting period until a buyer can actually close on their loan. So we have disclosures sent out, approval in 24 hours, CDs out, and we're clear to close in 5 days, meaning we get the appraisal back. So that portion of the approval is taken care of. The credit aspect of the approval is taken care of. And it's all about getting that back in front of the underwriter to certify this loan is clear to close. I don't know if that's...
Yeah. And what's your go-to phrase when you're talking to an underwriter and you need them to look at something? Like, do you schmooze them a little bit? Do you say something nice? Like, do you compliment them on their hair today? Or like, what does Zeno do?
Yeah, no, I mean, I wish it was, face-to-face video communication, but, obviously a lot of folks might feel that's an invasion of privacy, but so everything's done over the phone. But yeah, you started off with like, hey, this is a team effort.
Yeah.
Without your job, I don't get money. Without my job, you don't get an income, right? So we're working as a team here. So I always refer to emails and things like that. Hey team, hi team, what's up team? Because we are a team. We're going to get through this together. And, obviously, if you look at like psychology, you don't want to be, abrasive. Like, what the heck were you seeing here?
Right.
You want to say like, well, this is what I was thinking, like peer into my head, peer into my view of this, and tell me what you think about what my interpretation perhaps of the guideline was. Where am I getting it wrong per se? And so, yeah, it's more of like a collaborative effort because everybody wants loans to get done. Everybody wants their client to be approved and to buy a house. And so that's how we interact.
Yeah. Sorry about that. My phone thought I shut it off, but now it's off.
I think it's okay. You ruined it.
I know.
Just, you want to silence your phone just in case?
Oh, no, I
had to
that.
do my, okay, good.
Yeah, no, come on.
Jason, he's already on the right page.
I watch
so
enough
prepared.
podcasts. I watch and listen to enough podcasts. I know rule number one,
man.
DND. I mean, might as well just shut it off, Jason. Come on.
I know.
Yeah, but what if he gets a deal?
I know
Right
that's
in the middle of the
show. No, I mean that's huge because you have to answer. I mean that is the number one like sales call or sales training 101 is answer your dang phone, and it's like every successful person will say that. So it's funny, yeah. When we do these things, we kind of leave that vulnerability out there.
So, I mean, part of the topic is like what life in a real estate world looks like. And I think to your point, answering your phone is a big one. A lot of people don't do that. I remember being on vacation. My wife was, at the time she wasn't my wife, we were dating, but she was up in Snowmass Village, up in just outside of Aspen, Colorado, doing an art. I don't remember what it was like. It was just like an art session. It was like a 6-week program. Like she got to stay there, and I went up to visit there in Aspen, and we're walking around, and I answered my phone, and she looked at me for a second. I'm like, look, like I'm here on a Thursday evening, like walking around because I have the freedom to work from anywhere.
Yeah.
Number one. But with that is the other side of it, which is I kind of have to answer my phone if it's a client.
Yeah.
So you get the ability to work wherever you want to work and at your own schedule. But at the same time, you kind of have to be on call like most of the time.
Literally 24/7, I feel like, especially if you have a deal in the works, you might get an upset buyer or whatever, happening that might transition to when they get off of work. I mean, I always say my clients have a 9 to 5. I've got a 5 to 9 or even a 9 to 9. I've got to always be available whenever they're available. And that brings up like a tough aspect of it. It's like you never shut off. And that's the biggest thing of why people might want to join a team, is to have that backup system already in place so you can shut your phone off, because I think that's so huge in the psychological effects of people today. We're so glued to our phone. Our screen time is just, it's scary.
Yeah.
And even to like even deeper levels is like when you're in a meeting, when you're in a coffee meeting, I think it was Simon Sinek that was just talking about this, but when your phone is on the table, whether it's face up or face down, what that relays to your person that you're with is that's more important. Because if that goes off, I'm going to interrupt our conversation and see what that is. Similar to what you just did.
Yeah.
No, I'm just kidding. You tried to silence it. You didn't. No. So yeah, it's really difficult, especially for a relationship, if they feel like you're always looking at your phone, you're not engaged. So I think it's completely important to, make sure you have that time to spend completely detached with your family members, and then also even completely detached in nature to kind of reset your body to like not being glued to something. You've seen all the animations about just the droves of people just staring at their phones going through life. It's
true.
Up. Yeah.
Let's talk about real quick the worst deal you've ever had. I want the dirty specifics.
Oh my God.
No names to save the guilty, but
I abide by all the confidentiality rules. Yeah, you're not going to see me start naming names, and that's the tough thing about being in real estate, is that you are never guaranteed that money. Like, don't count your chickens before they hatch. That's like the biggest thing you need to take away from the real estate world, because it could be the smallest thing in the world, things that you would never think would happen. You always see the things like, oh, well, my buyer went out and bought a car for $800 a month, and now his DTI's out of whack. So that's a bad transaction. I had somebody quit before we funded the loan.
And you didn't tell them to not quit their job?
I thought
that's unsaid that you should not.
Well, honestly, I definitely kicked myself for that. I was like, did I tell him? Because to me, the onus always falls back on the loan officer, because you do. And I remember all my companies, we have a do's and don'ts. Don't deposit a bunch of money. Don't move a bunch of money. And if you didn't have that conversation, if I can't think back specifically in my head that I didn't tell him, don't quit your job, even though I thought it'd be implied, that's my fault.
Well, I think that's an interesting aspect to take, because a lot of people don't do that now.
Yeah.
Which is the idea of pointing the finger at yourself, maybe, or always thinking, what could I have done better?
Yeah.
Instead of like, that guy was an idiot for doing that.
Yeah.
Why did he do that?
Yeah.
You just kind of turn it around and say, okay, how could I have prevented this situation again? Because I don't want to do this again.
Right.
And so you just kind of internalize it or bring it back to yourself and think, what can you do? Because that's all we can do in life anyway, is just control what we can control. We're going to have these idiots later on that do something crazy, but we can't control that.
Right. Yeah. I mean, every failure is an opportunity to learn. So, and that's really what's helped me grow over these years. Why I transitioned from B of A to a retail lender, a more correspondent regional lender. Why? Because they treated the client better. I remember at B of A, we were getting audited in all these different regional operation centers. So files are getting passed back and forth between underwriters and processors. Well, that delayed the closing timeframes. We were locking refinances for 90 days and then extending them for 90 days. So you've got somebody ready to get a lower interest rate or take money out or whatever, who's just getting kind of strung along. Yeah. And, I felt terrible because I thought we'd close in 90 days. Then I have to tell them we have to extend it out again. So yeah, it kind of all goes down to how my career is all about learning how we can control what we can control and give our clients the best process by that. So that's, upfront education. Don't open credit cards, don't buy a car, don't transfer money, and all these things that will just help the transaction move along more smoothly. But, the worst, I can't point out, a worst
Did anybody ever
one.
get a divorce in the middle of it? Where they're like, we're going to buy this house. And they're like, okay, great. And then no.
Yeah, luckily not. But there have been some situations where people bought homes not married and had to deal with, splitting that asset when perhaps the other person didn't invest as much into the deal. So there's definitely a lot of learning moments, not only on my side, but for the buyer side too, that you just can't you can't really elaborate on until you kind of go through it.
And that's an interesting part about Arizona law. And what's the old thing they say is it takes 1 to buy and 2 to sell. So you can buy something in your own name and do your whole transaction yourself, but it's immediately owned by your spouse if you're married.
Yeah.
But if you want to sell the property, you actually have to have consent from both people.
Yeah, correct. Yeah.
Yeah.
Interesting. I didn't know that.
What other horror stories can I think of? Because I've definitely done a ton of deals. I've done builder deals out of builder account for about 8 years, where those transactions are spanning 6 to 9 months while the house is being built up. So more opportunity for drama. Yeah. So I've seen clients die.
Ooh.
Yeah. That's like that. Those were the worst deals ever. It's like I don't care about getting paid, but like what the heck? Like you just lost somebody, and the builder, I will not name names, was very aggressive, as you've probably heard the stories with builders these days, trying to push people in positions that are precarious. They wanted to maybe keep the earnest money because they weren't going to close, things like that. It's like,
I actually had a buyer was looking to buy a new build. This was probably 5 years ago, and her partner came down with cancer. And the builder did have, I can't remember what builder it was, because it would be nice to give a shout out to them for the way they handled it.
Yeah.
But like you're saying, at a certain point, the earnest money on a new build transaction goes hard. It's non-refundable. So you can't get it back under pretty much any scenario.
Right.
But we explained the situation to them and said, hey, there was a couple buying it. One of them got cancer. They have to go, be near a family and deal with this and get treatment. And so their life is completely changed. They're no longer going to be living, in Southeast Phoenix. So, and they said, yeah, no problem. And they refunded the earnest money. It was like you said, business. It's not always, people don't always do the right thing. They just follow the letter of the contract.
Yeah.
And they probably didn't. They could have kept it, but they didn't.
Yeah. Speaks a lot.
Yeah.
And that kind of goes also just to what makes a bad transaction or what can make a transaction worse is if, not all parties are willing to negotiate and work together to get a deal done. Because there have been times where something has delayed my underwriting process, whether it is trying to get a document or trying to move funds from something that has to be cashed out and then transferred, and they're taking a little bit more than we thought and anticipated as far as time to move something along, and we're letting the seller know this is going to delay escrow, and you get a upfront face-to-face communication that says, okay, no worries, I've talked to my seller, that's totally fine. And then the next day you get some type of adverse action, like a cure notice.
Yeah.
Like, wait, we just talked about this. You said everything was okay. We're going to close instead of Friday, maybe Monday, or definitely Monday. But now you're giving me, you're almost like disrupting the flow of it. Kind of adding more stress to the deal. But at the end of the day, the selling agent has to be the fiduciary and protect their seller. So I get it, but do you want to write a cure notice, or do you want to write a contract addendum that says we've moved out the close of escrow?
Right.
24 hours.
And when I'm talking to my agents, and my recommendation to them, like you were saying, to protect your client is to issue the cure notice.
Yeah.
So I've also I promote the idea of twofold. Like, one, you have the customer service, what we talk about, like here's the intention of what we're trying to do. Then you also have the legal aspect of, should this not go the way we both think it's going to go, here's the backup for what we can do legally. So sometimes we do issue a cure notice, but typically I would call, and I would recommend to my agents, call the other agent, call the loan officer and say, look, we're going to be filing a cure notice. Our intent is to give you the time that you need to do this, but we also want to have this in play just in case something happens and we can't, or you can't perform, or whatever the case is. But I always promote the idea that, hey, get on the phone and communicate that to people so they know there's something in the background that we can fall back on, but that's not really our intention to do that.
Yeah, and the cure notice, it has a stipulated thing that must be cured, right? Yeah. Whether it's getting loan docs to title, whether it's actually funding the deal. So yeah, there are ways to make it a little bit less stressful. and still get your point across.
Right.
You know.
What about any tips for somebody who wants to get into being a mortgage loan officer?
Yeah, I mean, not much else can teach you how to be a loan officer more than just experience. So I think having the most amount of at-bats and having the most amount of knowledge around you is the most important thing. So, you know, getting with a team or a company that has their vision is aligned with you to educate you and to kind of mold you into be a good loan officer is the way I would go with it. Definitely don't just go, you know, enter a call center, for instance. You know, Mr. Cooper's down the road. I know I could probably go get, you know, $100 per file that I fund over there and get a lot of at-bats. That might be a good thing, but it also might not be the culture that you want. So find the team, the culture that you want to be around and dive in that way. You know, definitely do the market research at who the big players are, who are the influencers out there, who's taking the steps to differentiate themselves with podcasts or whatever it might be. Community outreach is a big thing. You know, how influential and how impactful are they to their communities? Not just, you know, driving around in a BMW.
The community thing is pretty big in my book. It's such a, and I think, Ted, we've talked about that before, just the idea of the community being eroded to the point where a lot of people don't care about the company they work for. They think the company's there solely to provide them something, and that relationship is not always fruitful and doesn't provide a good community. And like you're talking about in the real estate business, we're all about community. Mm-hmm. I mean, we're talking about long-term relationships with clients because you want that repeat business. We're actually talking about a physical community because we're talking about selling homes. So there's that whole aspect that sometimes can get a little washed away when we kind of don't have that community feeling. And so to find some place that feels right and is right for your personality and who you are and what you believe is well said. Yeah,
I mean, you have to have purpose, right? I mean, being in a call center and just looking at fluorescent lighting and white walls and just being another number is just no way to live your life purposefully or just fulfillingly. And you know what? I might be talking out of turn there because there might be somebody that's how they want to work. And there's maybe a good atmosphere.
Well, there's something for everybody.
Right. And that might be that's the environment they want to be in, surrounded by people in cubicles. And there's no knock to that, you know? But yeah, so just finding the right cultures is definitely, I would say.
I think that we're about out of time for this first one, and we'll leave it there. In the next episode, I think we're going to go more into like the current real estate market with Zeno and get his perspective from a mortgage angle about some of the things we've talked about in the past, like the NAR lawsuit and some of the changes to transactions that are coming up. So Zeno, thank you so much for coming. It was awesome to learn a little bit more about you and how you got involved in real estate. And we'll see you on the next one.
Yeah. Thank you so much, Jason, for having me. Thank you, Ted. Appreciate it.
Yes, of course. Thanks for joining us. And we will see you guys next time.
Thank you for listening to the Axis Real Estate Podcast. Please like and subscribe on YouTube. Just search for the Axis Real Estate Podcast. If you'd like to get in contact with the show, please email mail@axispropertyadvisors.com. You can visit Axis Real Estate online at axisre.com. This podcast was produced by T-Door Productions. Theme song by Delicate Steve.